Hi, this is Sive Morten with the daily update on EURUSD. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Greetings everybody, welcome to the technical analysis of the Forex market from the ForexPeaceArmy.com. Let's continue to discuss the situation on the euro currency and start as usual from the daily time frame. Well, on Friday we suggested that probably market should hit this area, so on 618 resistance from the whole swing to the downside, from that high to that low, and somehow it will at least respect that area because this is a significant area of resistance and we should use it. This small swing to the upside inside of this some kind of an agreement between the weekly pivot point on the previous week's 131.40, it's 131.91, to enter on the short side of the market. So if you have done this, you probably have some profitable position, and I suspect that will be not bad idea to move your stops to the break even, because if you will visit our forum and read our weekly analysis, you will understand that on the weekly time frame, market still has some blur signs of the indecision. So some bullish hints are present now on the weekly time frame, and that's why we should be absolutely flexible for understanding of shifting of the bias on the daily time frame. So this could happen, in fact, that market could shift the bias on the bullish side, and our task in current video research is to estimate the potential level signs, what we have to watch for, just to not miss this potential shifting in the bias from the bearish to bullish. Still, based on the technical analysis, we have the bearish bias on the daily time frame because trend now is bearish and it holds bearish while market has hit this 618 resistance. This is absolutely normal price action. When the market holds some bearish trend, market has shown some deep retracement to the upside after this swing to the upside. So that is normal. The major problem for us will be when and if market will shift the daily trend on bullish side. In that case, as weekly time frame trend, as daily time frame trend will shift on the bullish side, and that will be the sign of the overall shifting to the bullish scenario in the medium term. And this will mean that market is ready to show some deeper retracement, at least to the 135, 136.50 area. But until that will happen, trend and overall bias and direction of our trades on the daily time frame holds bearish. That's why current price action doesn't erase the potential move till that area that we have suggested and expected almost during the previous 3 weeks. You could see that now if market will proceed move to the downside, we have that pattern A, B, C top, 618 target is 129.83, very close to the previous support, while 100% extension target stands very close to the 618 support area. The target of the directional weekly pattern is 128.50 area roughly. That level is 128.94. So just 45-50 pips difference between that levels. So they stand very close to each other. This could be the next target if market will proceed lower. And currently on the daily time frame, I do not see any reasons to think that this will not happen, because market has respected that level, market has pushed down from that level. So that is absolutely logical and normal 618 retracement from that swing to the downside. That could be the ABCD pattern right to this 618 support from this whole swing to the upside. So from the daily perspective, it looks absolutely normal, and the daily price action doesn't erase this potential move to the downside. So that is the weekly pivot point for the coming week, 131.40. And fortunately, this weekly pivot stands very close to the current price action. It will give us the significant help in the beginning of the next week to understand the short-term market sentiment. If market will proceed lower below the weekly pivot point and will hold there, then our chances to see the deeper move to the downside will increase. If market will flirt with this pivot point and take out this 132 area to the upside, this will be the first clue and some warning signs for the bears, because it could mean that market is ready to shift the sentiment on the bullish side. On the 4-hour time frame, what we see, trend is now bullish. We see nothing but the respect of that area that we have discussed on Friday. So market has achieved 1618 extension from that swing to the downside retracement. That stands in agreement with this 618 resistance, 131.91. So it's shown some taking out of the stops that have been placed above that area and returns right back. Now you can see that market is closed below this swing high, so that's really could be treated as the taking out of the stops above the significant area of resistance and nothing more. Now market returns right back. So in general, this looks like the bearish environment and potentially bearish price action. Market probably has more chances to continue move down rather than just take out that highs and continue move to the upside. On the hourly time frame, we see first of all on the MACD bearish divergence right around the major 618 resistance on the daily time frame. Also take a look at this nice bearish engulfing pattern. That was the wash and rinse of the previous highs and the 131.91 area. That is the 618 resistance on the daily time frame. So market just jumped about it, grabbed the stops that has been placed above that area and returns right back. That is absolutely bearish pattern. You can see also trend now is bearish, and that also is the stop grabber pattern. So you can see that market has trying to shift trend to the bullish side, but then fastly returns right back and remains trend on the bearish side. That suggested continue move to the downside and move below the weekly pivot point. Just below the market you can see two levels of the nearest support, 131.13 and 130.61. So what we have to watch for in the beginning of the week and what we could do in the beginning of the week. First of all, if you have entered on the short side of the market as we suggested in our Friday's trading plan, the beginning of the week, if you still haven't done this, move your stops to the break-even. That's the pressure of entering at the solid area of resistance. Why we always recommend to enter on the significant areas of resistance, because even if you will be wrong and market will proceed higher, this is a great probability that it will show some respect of the significant level. Even with the shallow retracement, that will let you to move your stop to the break-even, and if you even will become wrong, you will not lose your money. That's advantage of the open the positions at significant areas of resistance. So that has happened. You can see that is the respect of that area, and some bearish signs market is forming right here. So if you would like to enter on the short side of the market, how you could do this? Since both trends are bearish, as daily time frame trend as hourly time frame trend, you could use the nearest retracement on the hourly time frame to the upside to enter on the short side of the market. For instance, if the beginning of the Monday market will proceed lower and will meet some support here or maybe some below it and start retracement to the upside, you can use the 3-8 resistance of this wrestling swing or this wrestling swing to the downside to enter on the short side of the market. Because when both trends are bearish as daily as hourly, market usually shows shallow retracements when intraday trend coincides with the daily trend, with the context time frame trend. In this case, market very often shows the shallow retracements. In that case, you could use some nearest retracement to enter on the short side of the market. You have to watch for just for 2 moments as the that could be the reasons for the erasing of the bearish buys on the daily time frame. The first one is the taking out of that highs, because market has done everything that it wishes. So because it has grabbed the stops above the area of resistance, so its mission has been accomplished with that. If bearish buy still holds, if market returns right back and close above these highs, this means something different, because this will mean that probably market gradually shifts buys to the bullish side. because this will be quite unlogical from the bearish perspective. The return is right back and holding and close price and holding above the swing high and above the 600 resistance on the daily time frame. The second issue that we have to watch for is the shifting of the daily trend to the bullish side. If market on the daily time frame will move above the 600 resistance area and after some time will shift the daily trend to the bullish side, in this case, as daily time frame as weekly time frame will shift to the bullish side, and that will mean that probably the medium term sentiment on the market will shift on the bullish side. The market could proceed higher. These are two moments that we should be watching for in the nearest week. If nothing of them will happen, then we should expect continuation move to the downside, and I suspect that market will accomplish this, at least will accomplish this ABCD pattern with the target is around 128.50, 129 area.